then followed by Hiral, who will tell his experience joining Mastek. Arun will then give us a financial update. Abhishek will talk about the business update about UK, and then Umang will kind of round it off with the update on the universal business. Post which we'll take the Q&A session. As usual, I'd like to remind you that anything that is said on this call that reflects any outlook for the future or which can be constituted as a forward-looking statement must be viewed in conjunction with the risks and uncertainties that we face. These risks and uncertainties are included but not limited to what we mentioned in the prospectus filed with SEBI and subsequent annual report that you'll find on the website. With that said, I'd now hand over the call to Mr. Shank Desai. Over to you, Shank.
Thanks. Good day to all of you to be present on this conference call. You already know the people who are present here. Specifically, I would like to welcome Hiral Chandrana, Global CEO, joined us in 6th July. He has experience of around 14 years in Wipro, where he ultimately was managing $3 billion business, which he moved into digital in a big way. And before that, another 6 years in EDS, which became part of HP. I just was looking back to the quarter, and I must say that I'm extremely happy that it is one more step in our journey to become a major digital transformation player from India for the global market. The journey we started, of course, 4-5 years ago, when we were 1/3 of our size probably. And the journey is very satisfying. If I look at this quarter, of course, I will look at it only year-on-year numbers because that gives a good comparison. For first time, it is without any impact of the acquisition numbers. So year-on-year revenue growth, constant currency is 27%, industry-leading number. Profits have grown more than 70%, 72%. The order backlog is again grown at 54%. And our pipeline is exceeding all these numbers, in fact. So it's very satisfying to see our annual first quarter to move in the direction that we want to move ahead during this quarter, next 3 quarters and years ahead. So I'll spend very quickly what we are doing to make that happen. There are 3 things that we are doing to make that happen. One is build our capability to deliver these digital transformation results. One of them, of course, is to hire a number of people. We have added close to 520 people this quarter, which is almost half of our total addition last 1 year, and also almost 12-13% addition to our existing staff. But more important, we are building digital capabilities of all these people. By training them, we have created a training engine to make it happen, and that is very important input for our future growth. We are doing that with additional investment in delivery organization to build practice lines and so on. The second part which we are investing to build the growths of tomorrow is building the leadership. We have built new leaders in our delivery organization, building practice lines under the delivery organization, building technology capabilities under delivery organization, new innovation organization, and also CIO organization to make us digital. Of course, and it ends with this quarter with Global CEO, Hiral, with his great experience in digital and his leadership. We are looking ahead. And the last point on building the organization for tomorrow is about building the marketing sales engine. We, of course, acquired Evosys business, which itself is growing fast. But what is more important is we are adding customers 40, 50 every quarter, which we were not doing before this. But what is more important is to build an engine to convert this into a much larger customer business through digital transformation offering. And that is what has happened very well this quarter. We have more than 10 customers who are already doing in that journey and many more to come. So we are fine honing his ability to what we call cross-sell and co-sell. One good example of it is this 6 million account that we got in Europe, which was jointly sold by the team, Evosys and Mastek, and we would not have got it otherwise. So these are good examples of synergy. So building capability, building leadership, and building synergy. That is what we want to invest throughout this year so that we move ahead and be ready not only for next 3 quarters, but next few years. So I'll stop here. I'll pass it on to Hiral. Hiral?
Thank you, Ashank, for the welcome as well as warm introduction. Good day to all. Given it's my first time since joining Mastek, let me share a few thoughts for the short term as well as for medium term and beyond. First of all, I'd like to thank my leadership team. Some of them are on the call today, and the board of directors for making me feel at home in my first 2 weeks at Mastek. It's been action-packed, to say the least. Also want to take this opportunity to thank our customers for their trust in Mastek and the 4,300 now Mastekiers across 41 countries for executing successfully in these challenging times. As Ashank mentioned, I have significant experience in the US market. I've been in the US for about 26 years. 14 of them have been in Wipro. Last 10 years have been handling global P&Ls, global large businesses across different industries, across different service lines and digital services. And very, very pleased to see the depth of experiences in Mastek, as well as the strong value system and the governance practices. As many of you know, Mastek has got an amazing history for delivering innovative business solutions over the years. We have strong customer satisfaction and advocacy, but many of our customers have also evolved in the last 1 year during this pandemic time. So in the next 60 days or so, I plan to interact with as many existing clients as possible, either virtually or in person wherever appropriate. As you also know, 80% or greater than 80% now of our business is in cloud and digital. So we have a fantastic foundation to scale in this digital transformation wave, and Ashank very well summarized some of the investments that we are making. Under his leadership last couple of quarters, the leadership team has created a very solid 3-year strategy. Over the next 2 months, we'll work to refine and strengthen that a little bit, particularly as it relates to pan-Mastek, cross-Mastek global initiatives with a very rigorous plan to execute on that strategy. Shifting to H2 and beyond, given the size of the US market, all of you know the potential, so I won't speak about that much in terms of market size, but we believe there is significant untapped potential for accelerated growth in the Americas across different industries. We're seeing some very good diverse wins already. There's 2 or 3 different dimensions to that. Ashank mentioned about the cross-sell and some of these larger deals with Evosys and the broader Mastek services. One of the media companies we have recently won, where our solution included a Salesforce customer CX front end integrated with an Oracle back office cloud, which is a great example of our joint strategy yielding results. The second dimension is betting on a few verticals. While in the US, we have strength in retail and manufacturing already, we see healthcare and life sciences as a key industry vertical where we've already started winning deals. There's a life sciences medical device customer where we have a customer experience win recently as part of our D2X strategy. There's another healthcare group consisting of nurses, therapists, where we provide quality care to the local hospitals and healthcare agencies. So some really great examples of wins and momentum in the healthcare market. Now, looking at globally, we definitely have an intent to penetrate the Fortune 1000 customer market in a big way. It's not going to be easy, but we have some elements that are already in place. And over the next few months, we'll put and strengthen that together along with our partnership ecosystem and some of the investments that Ashank alluded to get more penetration in the Fortune 500 and Fortune 1000 customers. Abhishek and Umang will cover the UK business as well as our Oracle Cloud business, but I'm particularly excited about the private sector progress in UK, as well as some large deals that we are closing in the Oracle Cloud services, including what we call as Day 2 services in the implementation, post-implementation and managed services area. As we look ahead in the medium term, we have a great opportunity to engage with our customers in different engagement models, different outcome-driven models, engaging a mobile workforce, leveraging more AI and automation in our services. So all in all, very excited about the unrealized potential at Mastek. Over the next few days and weeks, I look forward to interacting with many of you. Thank you again to our investors and analysts who have supported Mastek through these years. I'll now turn it over to Arun for financials. Thank you.
Thank you, Hiral. A very warm welcome to everyone on this call. Extending from what Hiral and Ashank mentioned in terms of the business and the outlook in terms of what we want to create Mastek as an organization, let me take you through very key highlights of this quarter financial performance. To be specific, our operating revenue for this quarter stood at 516.5 crores, which is up 6.9% quarter-on-quarter and 33.8% year-on-year. If you split in terms of geographical segment, you will notice our UK business has grown by 43.8% year-on-year and 7.3% sequentially. US revenue have increased by 20.1% year-on-year and 12.2% sequentially. Middle East is lowered by 4.3% quarter-on-quarter and 19.5% year-on-year, while APAC and other segment have grown up by 7% quarter-on-quarter and to 30% year-on-year. So if you notice, growth in UK and US is driven by both digital services and also Oracle ERP cloud services, while Middle East degrowth is more driven by right-shifting of certain contracts due to higher sickness and travel restrictions to get resources onshore. While APAC growth is driven by Australia and other South Asian countries, where Oracle ERP implementation is getting strong traction on the back of proven technology, which Mastek is able to deliver outcome to our customers. In terms of operating EBITDA for the quarter, it was at 21.8%, versus 21.9% in the last quarter, reflecting 419 bips improvement year-on-year. PAT stood at 80.2 crores, up 6% quarter-on-quarter and 72.2% year-on-year. Our gross cash stood at 960 crores versus 849 crores in the previous quarter, while cash net of debt stood at 703 crores versus 589 crores at the end of 30th June 2021. We added 115.4 crores in our free cash flow, which reflect 144% of our net income, strong collection and others, which led to the growth in our cash and free cash flow for the quarter. During the quarter, we have added 40 plus new customers, reflecting 12 months order book at 158.4 million, which is up 54% year-on-year and 4.2% sequentially. Our headcount stood at 4302 as on June 2021. As Ashank mentioned, it reflects 500 plus resource addition during the quarter. If I have to sum up all the financial number with the business, this is another quarter of consistent financial performance, which we are able to deliver on year-on-year and quarter-on-quarter basis. One more fact to state that our year-on-year numbers are fully comparable, as Evosys acquisition was completed and consummated in the quarter one of the last year, and hence when we talk about year-on-year number, it's fully comparable. We are seeing growth across all the verticals and geographies where we are focused on as a company. Our UK government and Oracle implementation business continue to report healthy growth, both quarter-on-quarter and year-on-year. As we continue to invest in US market, and as Hiral mentioned about the opportunities out there and D2X and other strategy, we are seeing positive momentum and growth quarter-on-quarter and addition of new clients, both in retail and non-retail verticals. To sum up, if you find that the quarter has been positive both from top line and bottom line perspective, our order backlog is strong, which is giving us quite a good lead indicator in terms of delivering the consistent growth. With this, I will hand over the call to Abhishek to take you through more in terms of business updates, and we can pick up any specific questions that you have in Q&A. Thank you for your support and trust in Mastek.
Thank you, Arun. Hi, everyone on the call. Quick view of our UK and US organic business. The organic business across these two geographies clocked healthy top-line growth. Our UK business grew by almost 31% year-on-year. and right around 6% quarter-on-quarter as well in constant currency terms. Our focus on building enterprise business in UK has yielded its first set of results, as Hiral alluded to in his narrative. We acquired 3 new customers in the geography during the quarter, and which included one very prestigious insurance client as well. Cross-sell and co-sell momentum has also gotten forward, especially with the new team there and a dedicated set of people working across the aisle to drive that forward. We were assigned a preferred supplier status by one of our large customers, and from which the revenue is expected in the coming quarters. If I move my traction towards the public sector has maintained its traction with robust demand environment. Pipeline has grown at a very healthy pace in secured government business. The logos like Home Office and HMRC have added quite a few opportunities, and healthcare space continues to kind of drive that momentum. However, a marquee stuff there to note is decision making has been slow during the quarter, and we expect some major adjudications in the coming quarters. That said, we continue to solidify our sales engine both in public and private sector. We added a few headcounts in both the sectors to increase our field sales force coverage. If I look at the US business quickly, that has also come back into the growth mode with revenues growing right around 6% quarter-on-quarter. We added 6 new logos in the geography, and these are all from diverse verticals, including manufacturing, logistics, and grocery retailers. And we had outlined earlier as well that we want to diversify our client base out of the retail, and these wins reflect that trend. Cross-sell and co-sell continues to get traction in US geography as well. 3 new deals signed into the Eversys customer.
Ladies and gentlemen, the line from Mr. Abhishek Singh has got disconnected. Request you all to please stay online.
Maybe Umang can start and then take over from Abhishek.
Yeah, Umang, go ahead. Why don't you go ahead and continue?
Sir, the line from Mr. Abhishek Singh has got reconnected. Mr. Singh,
okay. I'm not sure where I got dropped, but just to quickly conclude on the point, I was talking about the US business. So hopefully we gathered some facts around the geography's performance, that we have added new logos, revenues have grown, and customers are coming from diversified verticals. Cross-sell and co-sell has also gotten good traction, and we continue to solidify our sales and pre-sales in the geography for increased market coverage. And I'd like to conclude by sharing the fact that we have had good headcount addition as well in both the businesses, with 30% of those being graduate trainees, to ensure that fulfillment continues to be seamless. And we would say that the overarching theme continues to be fulfillment and retention in the immediate term, to ensure that the business and the growth remains unfettered. With that, I'll hand it over to Umang for his views from the Oracle side of the business. Over to you, Umang.
Thank you, Abhishek. Hi, everyone. Good day. Hope you're all doing fine and staying safe. So on the Oracle side of the business, it has been a phenomenal quarter, very eventful from various aspects. It's a quarter where we've had our highest value in terms of order book that we've ever had over the years of Eversys existence. And not only has those order book been in terms of volume, but also in terms of the size of deals that we are seeing are significantly moving up. So the average deal size has been constantly going up, and this quarter is definitely a standout as far as that is concerned. We added 9 new customers who were in the $1 million plus kind of range, including 2 cross-sell transactions, one of which Shank alluded to was around a $6 million plus transaction out of Europe. Also, the general business trend in terms of focus and investment is continuing to grow. So we are seeing really good momentum. Oracle declared a really strong Q4 result, and a lot of that is also reflected in the way our business is currently shaping. all round, all across in terms of the amount of new order book and the amount of execution and successful execution that we are delivering all across. We are also currently, heavily planning in terms of our future and really building up the way forward. So our, one of the most important initiatives for us right now is building up our team for the future. So building up our supply chain to execute the kind of growth that we are really delivering. We're looking at building a team of 500 plus new domain experts and graduates who would be trained on the Oracle product and build a strong capability team from where we are today. On an overall basis, we are currently, we continue to focus on the top 5 strategic agenda that we had, shared out with you over the last few quarterly calls, and we continue to focus on those 5 agenda itself. The first, and I'll just recall and recap we share some statuses on those. So first was around delivering a value-based or an outcome-based delivery. We continue to invest on that particular program, and we are now targeting to move almost 15 to 20% of our install base in this year on that kind of a program in terms of where we're delivering measurable outcome or value-based delivery to them. North America and Europe continue to be the growth initiatives and growth engines for us with significant headroom to grow. We've performed more than 100% growth in both these regions over the last 12 months, and they're looking for a similar growth over the coming 12 months in these 2 geographies. And our investments and the whole approach and focus is aligned to that. The other big area for us that we are seeing growth in is going to be managed services or day 2 services. We are calling it application enhancement services, which is where we are not just looking at supporting the customers that have been implemented by Evosys in terms of their transformation to cloud, but also looking at targeting customers who have not chosen Evosys but have chosen, say, the big 4 or the big 5 consulting firms in terms of their implementation partner. But we see a good market for us to go back and win managed services business on those accounts and not just deliver, lights on kind of approach, but deliver continuous enhancement and a value-based delivery to them too. So that's another area that we continue to focus on, and we are seeing good traction on that area. The next key strategy that we have been continuously evolving and growing on is around our verticalization. Hiral alluded to that we are looking at moving into the Fortune 1000, kind of market, and verticalization is our key approach to that, to go to that market. Clearly, we have already organized many of our geographical teams within the geography to be vertical focused. So North America team is going to be completely vertical focused now. The UK team was always vertical focused. And therefore, we are now narrowing down on the top 4 or 5 verticals that we are really going to invest in, and we see that we are going to move up the chain in these verticals: healthcare, life sciences, manufacturing, public sector, ENC, etc. The last and not the least is our SAP attack or SAP complete strategy, and that continues to have really great traction within the Oracle world, and we are very much renowned by Oracle as one of their top partners as far as the SAP complete business is concerned. And our pipeline on the SAP complete business continues to grow significantly, and we are hoping to see some significant wins coming out from that SAP complete market also as we move forward. So all in all, it is raining, not just in India, but raining in terms of orders and value all across the business. And it's a time to really invest, build up more capability, and really deliver to the business growth that we are seeing here. So that's broadly where we are in terms of the Oracle business. And I'll now pass this back to Divakar and Asha for the Q&A sessions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Baidik Sarkar from Unifi Capital. Please go ahead.
Gentlemen, good morning, good evening, and congrats on a great quarter. A couple of questions. Abhishek, first up, thanks for opening remarks. But how would you like us to understand with some greater degree of granularity the incremental digital spends you're seeing in the UK government cohort? And importantly, how do you think we're placed to increase our market share, given how tiny we might be in the scheme of things you did cover the macros, but some granular tailwinds you're reading would be interesting to understand.
Baidik, thank you for your question. Absolutely, the UK public sector space is buzzing with opportunity at this point of time. The digital transformation opportunity within the government space. The government stated objective of digital by default and digitalization of the citizen services are ensuring that enough and more demand is coming in that direction. This is also coupled with the fact that certain customers like HMRC in particular have had a lot of 10-year billion-pound deals or agreements coming to conclusion, which are now being fragmented and disaggregated and offered to niche and smaller players. So whichever way we dissect it, Baidik, the opportunity in the customers that we service are growing exponentially. And our stated strategy of deepening the customer relationship and widening the customer base. So these are the flavors on deepening the relationship. If I look at the wider customer base, there are identified departments which are where we are making the pitch, and these are the ones which are impacted by Brexit, and they need to do few things between now and 31st December to get the nation ready for post-Brexit world. So I would say that opportunity-wise, it's fairly rich and similar. I won't say it's absolutely same, but it's similar trend is expected in the private sector or enterprise space as well, where the competitiveness of the UK businesses have to go up to survive to provide the goods and services seamlessly to their international market, especially in the European space, with tariffs coming in. So there too, there is a demand for digital services to drive in a degree of efficiency and hence the competitiveness. So all in all, Baidik, I would say that the demand environment is robust.
Sure. Is there an indicative big pipeline that you see materially up YOY basis? And the corollary to that question is, do you see increased competitive intensity? Because we see great deal of vendors focusing on that exact cohort. So the opportunity pie might be large, but then the denominator might be increasing by the day. How would you address that?
Vendor competitiveness has not really changed. The landscape is pretty much the same. The large players and the niche players that we come across are pretty much the same. However, I would like to mention that some of the opportunities coming in, especially in the HMRC space that I mentioned about, this is one of the most sophisticated outsourcers, and it is used to being serviced by one of the most matured vendors, the likes of the absolute tier ones in the international market. So when those opportunities are coming up, the incumbents are trying to make it difficult. And the niche players like us will have to raise our game, both in terms of capability and capacity, to address even the disaggregated chunks coming out of those contracts. That's the way we are looking at it, Baidik.
That's helpful. Umang, hi. Thanks for your remarks as well. And I seem to ask this question to you every time around, which is, say, 2 years out. Would you be concerned about maintaining this high base of project-related work? And the corollary to that question is, what's the services stroke annuity run rate within the business pie as things stand today in terms of numbers? And how do you see the non-project revenue base evolving?
So, Vaidik, I think a part of the answer is there in the question that you have asked. So, long-term view, I mean, of course, the transformation business is peaking and it will continue to peak for the next few years. But yeah, over a period of time, long-term, I don't know whether it's 2 years or 5 years, there will be a space where the transformation business will gradually try to plateau down unless there's some other transformation that comes up by then. But our plan and strategy is therefore to add more and more managed services or the application enhancement services to our kitty. The amount of application enhancement services that we are currently seeing in demand is phenomenal. Primarily because of the fact that the product that you're implementing, it's not like, you once implement and you're done. These are getting updated every quarter, and the kind of technology change that we're seeing is phenomenal. So the kind of work that we are getting in terms of the enhancement and the maintenance of the application is consistently growing. And we are seeing those kinds of customers not only in our install base, but beyond our install base also. So our long-term view is to keep adding that kind of, application enhancement or managed services business to our portfolio. Currently, it is at around 30%. Our, vision is to bring that to around 50% over the next 2 years. And that's the future that we're trying to see, because all the customers that we're adding are not just customers for now, but they are customers for long-term future for Evosys and for Mastek. And so it's application enhancement and at them, as well as acquiring new application enhancement customers wherever they've not chosen us there as their partner for transformation today.
Sure, that's helpful. Hiren, welcome to the fold. I'm sorry I joined the call quite late. Is Hiren on this call?
Yeah, it's Hiral.
Hiral, hi. Welcome to the fold. And so very broadly, how would you summarize Mastek's right to win in the North American market? And, as a part of your immediate deliverables, would you have clarity on the practice lines that you'd like to build, as in package implementation versus, say, pure services? How would you like us to understand your focus areas in the short to medium term?
Yeah, so there are two parts to that question. The right to win, let me take a step back. There are elements of digital services around what Mastek has been delivering for customers, as you know, over the years. I think that's still a core part of the app dev digital transformation that customers are going through. Over the last year, as you know, through this pandemic, many operating models have changed with the digital commerce initiatives that our customers are driving. And we have a very solid strategy in that area called D2X, which is direct to stakeholder, direct to customer, direct to supplier, direct to even any other stakeholder in the organization. That is starting to yield some really good results, as Abhishek also mentioned earlier. And we've seen some good large wins, and we expect to see more. The third part is what Umang alluded to with respect to broader Oracle managed services, data services, and some of the cross-sell that Ashank was mentioning. So the reason I'm recapping that is we have those elements, we have those pieces, if you will, of the right to win. I think what the focus is in the next couple of quarters is to integrate that to create more large deals, integrate that to create more penetration into the Fortune 1000 customer base, as I mentioned earlier. And we have a good foundation in place. Now, very quickly on your service line sort of practice capability question. Clearly, there is an element of cloud and data transformation that's going through with all our customers. So that's clearly going to be a focus area, both on the platform hyperscalers as well as more customers invest in data monetization and AI. That's a key capability that we plan to strengthen in the coming months, in addition to some of the digital and cloud services that we already have. Hopefully that's clarified.
Thank you, Babis.
Thank you.
Thank you.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Mohit Jain from Anand Rathi. Please go ahead.
Hi, Hiral. Just a follow-up on what you just said. I wanted to know more on your plans of scaling up in the US. Like you spoke about verticals and all, but what could be the inorganic, organic component? Are you looking for M&A as an option to scale up quickly, or would you first look at organic growth and then eventually go for an inorganic? That's question one. Second, if you could share, this is for Abhishek, if you could share some outlook on the private sector in UK. We were building up some team there over the last 2 quarters. So what are the results and how should we expect this particular revenue stream to show up in the next year or so?
Sounds good. So Mohit, first of all, thanks for your support towards Mastek. I think inorganic is always going to be an option, as has been communicated in the past. We are continuously evaluating options. But let me first cover the organic elements. As I mentioned earlier, we have the pieces, we have the elements of what it takes to be successful. We are seeing signs of diversification beyond retail and manufacturing, like I said. The reason I picked up healthcare and life sciences as one area is because across the businesses and across the capabilities, we're seeing some good momentum, whether it's life sciences or even the core healthcare market. And as you know, in the US, the spend is significant. Another area is financial services. Clearly, that has been in the past a strong area with insurance and the Majesco business that we used to have. So that's something that we are evaluating as well. But the partnership ecosystem, which we are starting to build on, is going to be a critical part of the strategy as well. So within Mastek, we are implementing various platforms ourselves, whether it's Microsoft, whether it's ServiceNow and others.
And we have seen signs where customers are asking us to deliver those integrated cloud capabilities across applications, across platforms. So partnership ecosystem with some of the key players, the key cloud players, is going to be an important part of the strategy. As I mentioned, when it comes to inorganic, we'll continue to evaluate. It's going to be a parallel strategy, Mohit, to answer your question. And data and cloud are two areas that we're focused on right now. But we're going to evaluate some AI companies. We're going to evaluate some vertical specific companies as well as we go ahead. I'll turn it over to Abhishek on the private sector for UK.
Thank you, Hiral. So, Mohit, private sector, I would say, is just as nascent as it gets. We have got our existing footprint is in BFS and microfinance sector and some bit of retail clientele. So the first part was about defend the estate and ensure that there was no degradation. And as last year, due to COVID as well as some of the internalizations, the estate had shrunk. But now this year it is about defend and then build on it. And the head of private sector sales joined us in April, and a couple of other sales folks have also joined. So that's one part of the strategy. The other one is obviously leveraging the Eversys clientele for cross-sell and then eventually get into the co-sell mode of doing it together. So it's in the nascent stage, to put it mildly, and in coming years we would expect it to be at the organization's growth rate at the bare minimum.
Understood. That is also largely driven by UK actually, so you may sort of accelerate the whole thing. One is for Arun. On the margin side, this attrition thing is rising for everyone in the industry, also for us. So do you think during the year there could be a chance of wage correction, which Mastek may see, and therefore margins may come down a little bit from where you are currently?
Yeah, Mohit, precisely the right question. As all of us are saying that, there's a good attrition which is going on. And as Umang also mentioned, we are building up the team for future growth, which is through the freshers and other competition, right? So, yes, there will be some pressure into the margin, Mohit, but our endeavor is going to maintain, as we mentioned earlier, in the FY21 level, at least, So, while the cost base is going to come through hike and through correction, we are planning to leverage our fixed cost as we grow and also rebalance our SG&A. So a part of those costs will also kind of, will offset with operating levers and, as I mentioned, leveraging the growth. So there could be a couple of basis points impact, but our endeavor is to maintain FY21 kind of a level, Mohit. Unless anything changes significantly in the industry, then we'll speak to you. But that's how we see at the moment.
Thank you very much, sir, and all the best.
Thank you. The next question is from the line of Madhu Babu from Canara HSBC. Please go ahead.
Yeah, hi, sir. Congrats on a strong execution and a directional momentum. So just on the UK government business, we indicated some slowdown in decision making. Last quarter, I remember we indicated good deal signings in the UK government. So how are they ramping up? And how is there a new team in place for UK government also, or how is the team there? And second is on the hiring has been very good this quarter. So do we intend to keep this kind of momentum, especially and what are the challenges faced for a company of our size in getting fresher talent, because there's a lot of competition for freshers? Thanks.
So I'll take the first question. Madhu Babu, the market or the sales team for the UK public sector is the same. All we have done is enhanced it for better coverage and newer areas or newer customers that we want to get access to. There's no change in the sales leadership, so to speak.
So as far as the talent goes, as you know, we have continuously investing into the new talent. And to that extent, we had added 500 people. Idea is to see that we take care of attrition and growth together, and also focus on training the people to the new skills, because that is going to be very crucial in terms of what we do and how do we leverage what we have. In terms of numbers, I think we'll calibrate them as we grow. And as we look at the second half, we would, of course, staff for our next year's growth. Abhishek sir, so the UK momentum will be intact in the public sector because we hinted some slowdown in decision making in the opening remarks. So UK public sector momentum will be intact?
Yes, the demand environment is robust. We are executing on it. All I wanted to give an indication was that there are macro environmental issues which do impact the speed at which we expect the businesses coming our way. But that said, there is a order booking and there is a backlog apart from all the stuff that's out there for adjudication. This was just a heads up from what's happening in the NHS space vis-a-vis UK government.
Okay, thanks.
Thank you. The next question is from the line of Ashish Agarwal from Principal India. Please go ahead.
Sir, just two things from my side. First is Mr. Hiran. Sir, just wanted to understand, given the fact that we need to expand in US and grow our non-government business significantly from here on, what kind of an incremental investments do you think need to be made? And will that impact the margins over a 3 to 5 year period? That is one. And secondly, just on one data point, it seemed like that in this quarter the margins in the Middle East business dropped significantly. Any specific reason around that?
The Middle East question, I think that Arun answered. I'll come back to US answer along with Hiral.
Sure. So, Ashish.
Yeah. So,
Arun, you carry on, and I will pick up the second.
Correct. Okay. So Ashish, the US expansion and the private sector UK expansion has got some similarities, like you rightly pointed out. The capabilities that we have, like I mentioned earlier, whether it is cloud native development, app transformation, digital transformation services, UI UX, digital commerce, D2X, as well as some of the cloud implementations with Oracle and that Umang alluded to, which is application enhancements. The various elements are there in place, right? So from a capability enhancement perspective, that's why I called data and AI and a little bit more of a cloud platform play. Those are the areas that we will strengthen from the capability aspects. But the synergies across Pan Mastek, across different regions, across different business units, I think can be strengthened. And that's where we're going to look at a very rigorous service line strategy as well as an integrated solutioning strategy. Because we are starting to see much more integrated deals, much more larger deals, as was discussed earlier. And in some cases, it's a matter of having an operating model in place that can cater to that kind of demand. Ashank alluded to one of the large $6 million deals. That's a great example where it was multiple towers. Even in some of the deals that AWS in the Oracle business has won, there are multiple Oracle elements, not just one ERP or one HCM tower, multiple aspects of Oracle. Surround services around that with integration with data coming into play. Same thing with the private sector, as Abhishek already covered. We see some good momentum. It's early days, but we have those elements in place which we plan to cross-leverage across the globe. So I don't think there's going to be impact on margin per se because of that. And as Arun kind of alluded to earlier, we have an operating rhythm in place to manage that at an overall level. I'll turn it over to Ashank if he wants to add anything on the overall strategy, and then to Arun on Middle East.
Yeah. So, only one addition. Hiral, you have covered well what at operating and organic level we are going to do. The only investment that we would do, obviously, in the growth strategy of US is the inorganic growth. And as Hiral also said, we are looking at multiple companies, and if the fit is right and it fits into our strategy of A, building capabilities, B, synergizing our digital transformation story. If these two things are there, we would be happy to invest in US market for making that happen. So that obviously will have in terms of the cash that we have today.
Thank you, Shank. Ashish, very quickly on the Middle East margin side, the lower margin is driven by there's a sickness which caused both onshore and offshore, which led to delay in project execution and setting to the right. That led to margin erosion in the current quarter. Additionally, due to travel restriction, as you know, you'd be knowing Saudi and other countries, there were travel embargo, which restricted our ability to transfer people from India. Typically, that's the model. However, some of the contracts we need to provide people onshore, so we had to get into subcontractors model. They come expensive. Again, that's also impacted the margin. Third, again, since travel embargo continues and it's kind of relaxed, again bringing depending upon how the COVID cases are going up, we are investing further. We have to invest into local hires as well to take care of the on-site presence requirement from the customer perspective. All this led to erosion in the margin. The margin should come back gradually to its normal level in a couple of quarters because some of them are temporary and some of them will take a little longer to recover.
Got it. And lastly, sorry, I'm repeating a question I think which Mohit asked. So right now there is no plan for a second round of salary hike, but you may decide it if the attrition keeps on going up. Am I right in assuming that?
So Ashish, we had salary hike last year, which was delayed and is given effective December. This year's salary hike typically comes in quarter 2. So we are still evaluating and we are considering the option of giving the salary hike in quarter 2. More will conclude between now and next 3 months, maybe 30 days. But there will be salary hike definitely. And what I said to Mohit, again, I'm repeating the same thing, there will be hike and corrections. But impact of those we are planning to mitigate with the help of the growth. Basically, as the growth comes, we are able to leverage our fixed cost, and at the same time we are able to rebalance our SG&A investment. So a greater portion of those impact will try to manage through the business and also through the operating levers improvement, which we are doing anyway from last 4 years.
Right. Got it. Thanks a lot.
Thank you. Ladies and gentlemen, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of N.J. Puranik from Enam Securities. Please go ahead.
Hi, I have a question for Hiral. This is about the service line and capability. How do you look at expanding the deal sizes going forward? Coming from your background of a large enterprise, what do you think is missing in terms of adding new service lines to the portfolio? And especially when you look at digital strategy, so where are you today? So in terms of cloud migration, where are you? And customer experience. Cloud migration, I think you are significantly ahead. With Oracle around, you are very significantly ahead. From a customer experience, big data and cybersecurity, these are the key elements which will, in aggregate, give you larger deals. So where are you and how will you fill up those gaps?
Hiral, you would like to answer? Yeah, sure. No, great question actually. So let me kick it off and Ashank, Abhishek, Umang, feel free to add. So when I look at the service line capabilities and transformation, there are 3 big buckets. And then I'll spend maybe a minute here because I think it's an important part of our overall strategy. So there is the business transformation, which is essentially driven by digital demand and the application services as well as the enterprise applications business that we have. That does include cloud, that does include ERP and various elements of enterprise apps. It also includes the application development, cloud native development of application transformation. That's again very closely connected to business processes of the customer. So I'll put that in the application transformation / business transformation bucket. The second category is what we're calling intelligent transformation. Now here, the elements of data, elements of analytics and AI come into play. There is an automation continuum which we plan to embed into every part of our delivery and customer engagement. So this is a definite focus area, back to our earlier comments as well, where we plan to strengthen either through organic as well as inorganic elements. The last part is the experience transformation. Now, in experience transformation, we have certain elements that are already in place. Like I said earlier, the D2X strategy, which is particularly working well in the US, has some interesting elements beyond just front office, because the whole idea is to connect from the customer front office all the way to the middle office and the back office, which could drive integration, API microservices, as well as ERP cloud back office integrations. And there are some interesting examples of cross experience platforms, for example, Adobe Magento, Salesforce, as well as the Oracle CX, which is a business unit within Oracle, where we're seeing some really good demand. So all in all, if you look at it in the application sort of transformation bucket, we want to strengthen the cloud platform play. In the intelligent transformation bucket, we want to strengthen the AI and data play. And in the experience, we just need to kind of bring it together and connect the dots from front office to back office. One very important element of the strategy, which I alluded to on the partnership, we, at least for this year, do not plan to build organic capabilities on cybersecurity or infrastructure. However, we are starting to see deals, particularly in UK and even certain parts of US verticals, where that is needed. So we have a partnership strategy in place. We'll share this, maybe in the next quarter discussion. But for cybersecurity and infrastructure, we have a holistic play so that we can cater to some of these large deals that they're referring to. Ashank or anybody else, if you'd like to add anything.
No, I think I'm fine with your answer.
And what will it'll make to your deal sizes once you've built these capabilities? And one important missing piece is the analytics, big data. Or would you like to focus on few capabilities, or you would say that I'm not going to focus on everything? I'll say I'll not invest too much on cybersecurity. I'll get into big data in a big way, because that's a future, and customer experience, because that's very vital.
Big data and analytics and AI is definitely an investment and focus area, as you mentioned. Within that also, we are dissecting in terms of data monetization. We're looking at, actually, we're already delivering certain pilots, and Abhishek can talk about it. We're also doing some pilots in the US with machine learning models, as customers are looking to move from this pilot stage to much more production and larger implementations of AI. So clearly, that's a big focus area. I think the transformation that customers are going through is also very interesting, because some of the business models that are currently in place, there is an opportunity to look at outcome-based delivery. So that's why we're very excited about some of these capabilities and integrating them together, because now we can start delivering more based on customer outcomes and business process outcomes. And, Umang mentioned about his 5-point strategy. Evosys business has really done well when it comes to value-based delivery, which is really looking at the business processes and the customer outcomes. So we plan to look at that as a synergistic area across Mastek globally. And that will be a key element when we look at multiple towers and multiple practices as part of large deals. Right now, we are starting to see $5 million deals, even in the private sector. We would like to, elevate that to even 10 million and plus deals, and hopefully even higher in the future.
Thank you. Mr. Puranik, may we request that you return to the question queue for follow-up questions. Next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity and congrats on a good set of numbers. Just a question on the way we are thinking about the number of active. So we have more than 50, accounting for, let's say, about 50%.
This is the operator. Sorry to interrupt you, Mr. Rajesh. Your audio is breaking from your side, sir. Please check.
Is it better now?
Yes, sir. Please go ahead.
Okay. So I was asking about the typical deal size, that our top 10 customers are around 48%, and we have more than 650 clients. So are we getting to a point where, to service the clients, we are hiring contractors, and therefore, that will impact the margin? Whereas some of the other competitors, what we have noticed is that they are cutting their tail. So I'm just curious, how are we thinking about our business?
I'm not clear of your question, Ashank here. You are saying that large customers account for our X percentage. So what is the question?
So the question is that do we have too many clients which are giving us very low revenue, and to service that revenue, we have to essentially go and hire contractors, subcontractors, and therefore that will eventually impact our margin. So that's what I'm trying to understand, especially when we listen to some other mid-tier IT companies, they are trying to reduce the number of clients they are servicing. So that's what I was trying to understand.
Oh, okay. Let's answer it, and maybe Umang can also add, because most of these clients are at our Oracle practice. So, see, it is like this, that any customer acquisition has certain costs, and that cost obviously is accounted for when we have built these results that we are delivering. So we are presently acquiring 40, 50 customers and at preserving the bottom line, because model allows us to invest in sales and marketing and deliver the results at a gross margin which can service the EBIT that we are talking. Now, that is unlikely to change even if we grow large number of customers. As regards subcontractor goes, you see, it is always the mix of subcontractors we are hiring. So one example is what we have done this quarter. We have hired 500 people. That is exactly to serve this coming up market and depend less on subcontractors. However, subcontractors we do employ, and Umang can add maybe the kind of subcontractors we add in specific areas.
Yeah. So there are two aspects to this. One is as far as our customer qualification and quality is concerned, we are definitely getting more zeroed down in terms of our focus. So we spoke about the vertical focus that we are moving into. And therefore, looking at the customers from a particular area of specialization is going to become a part of our strategy as we move forward. There is, of course, clear evaluation in terms of every deal on what kind of margin are we delivering them at and so on and so forth. There is I would say, healthy percentage of contracting or subcontracting in a part of our mix, not necessarily not high at all. And clearly, we are not looking at business wherein we are just being the trading partner in between, where the delivery is done by subcontractors and we are just getting transferring or handling the deal, passing it through us. So that's not the business that we are really into. So, like I said, there is some portion of subcontracting, but it is healthy. And there is also portions of focus in terms of going forward business, where we are trying to look at some verticals as our key focus and trying to look at the kind of customer acquisitions that we are going to have.
Right. Okay. And my next question is just given the momentum we are seeing in the deal flow, and as somebody said, it's raining deals. Can we expect that we can potentially do 20% kind of growth this year?
I think Arun can answer that question.
Very quickly, Rajesh, if you notice, our current quarter growth is 34% year on year, right? So if we continue to deliver, and as you can go by our order backlog, which looks very healthy, 12 months, which is $158 million as we speak. Which is, if you again compare that last year to this year, you can find this good lead indicator, which makes us believe that will continue to grow. Now it depends upon, how we are able to continue getting more and more orders as we have done in the past quarters, and converting them into revenue with the help of our hire and retention strategy. I'm sure we can deliver to those kind of numbers.
All right. Thank you so much.
Thank you. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
So first question is for Hiral. So Hiral, as you are coming from an extremely large IT organization to a much smaller one, and Mastek has its aspiration to grow from a small to mid player to a mid to large player. So what are some of the gaps that you have witnessed, not just in terms of the capabilities, but if the organization has to move to a higher orbit, you might have found some gaps in terms of culture, people, training, or the capabilities of the current people. salaries, higher level hiring, etc. So what are some of these gaps which would be your area of focus in this financial year, which you have identified, and how do you plan to fulfill it? So that's the first question.
I think let me answer it before he steps in. Ashank here. He really just 15 days in the job. I think some of your questions will be best answered by him as he moves along, probably next quarter. But we are
Sure.
going to address those what are in first few days of the vision.
Sure. No, Sarvesh, thanks. I think it's an important question. As I look at, I think I mentioned in my opening comments as well, one of the strength areas in terms of culture and value system of Mastek, as you know, the organization has sustained and also innovated continuously across multiple decades. And I had a great opportunity over the last week or so to go through some of the board meetings, some of the discussions with the various team members. Also, we had an all-employee hands-on meeting. I also made a trip to Dallas to meet the talented team out there. So all this has happened in the last 1 week. And I can tell you very passionately that the value system, the governance, the cultural fit is very similar to the likes of Wipro. And that's one of the biggest reasons that excited me to join as well. Now, in terms of gaps, like Ashank said, we're still in that process of looking at which areas need to be strengthened, which areas need to be transformed. I do remember one of the board member conversations, a couple of months back, where they said, "Hey, you don't work in Mastek, you fall in love." And in the 2 weeks that I've seen, I think now I understand why he said that. This is an important element of our cultural transformation, which is a continuation of Mastek 4.0. There are elements of transparency, there are elements of empowerment which are already in place. So I think there's no gaps really in terms of cultural and foundational elements. One area that we do plan to strengthen in the short term is marketing. Now, I do not want to keep Mastek the best kept secret. I think there is way too much depth of experiences. There's some very, very interesting and complex work that we're delivering. Umang and Abhishek talked about some of those. And it's very important for us to articulate that value to our customers and the external ecosystem and to all of you, frankly. So we do plan to share our 3-year strategy and our go-to-market in the coming months in more detail. But we do want to elevate the One Mastek brand. We do want to elevate our overall marketing strategy. And when I say marketing, not just communication, but account-based marketing, content marketing, working with customers in terms of case studies, sharing some of the business value that has been added. And there are some great lessons, again, from the Eversys experiences that Umang and team have built over the years. So if I were to call out one area outside of the service line capabilities that we talked about in some segments, the overall marketing strengthening is a key focus for this quarter. So let me stop at that and more to come in the coming months.
Sure, we'll look forward to that. Second is on margins. So I think few quarters back, our commentary was that there might be a margin compression by, let's say, 150 basis point or so because of the gains that we had in terms of saving during the COVID times. They are likely to run off. But now I think, this quarter the commentary is that the margin which we saw in FY21 and in this quarter, which is around 21-22%, that is going to be going forward the new normal and sustainable sort of a margin. So hence the impact of one-off cost saving, etc., which we had attained in the previous financial years, may be blunted by the operating leverage in the business because of the growth. So is that the right way of understanding your margin trajectory for the future?
Arun, can you answer that? Yeah, let me come. So very nice question, and I think we had spoken about that. So at the moment, those savings which were driven by COVID, and when you get into more details, these are typically your travel-related savings, right? And all of us know that the COVID is not gone. It's going to stay. The travels are not going to be same as it used to be, pre-COVID days, right? So cost will come back, but the cost will not come back at one go. It will come very gradually, to be precise. And hence, we don't know at this point of time how the world is going to open up, what kind of cost is going to come back to business. If our business growth continues as we are seeing, a lot of those, cost once they comes, maybe partially offset it with the improvements which we are driving, right? But at this point of time, when we state that, our endeavor is to maintain the margin, our endeavor to maintain the margin is also subject to that the travel will not come back to the same magnitude as it was pre-COVID, as the things normalize. And it's a little longer term, to be precise, to see those kind of travel to come back.
Thank you, Mr. Gupta. May we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Thank you, Ashank. Hiral, everyone is doing very good hard work. Sir, my question is how we use cash to how we use the cash.
Okay, that's the question. Ashank here. Thanks, Ravi, for that question. So, as you know, we have been building this war chest for last many years in terms of free cash flows out of our productivity improvements in IT services business. So first usage of that happened to us when we acquired EOSys. And then we also have payments as we acquire the remaining 30% stake. So some of the cash obviously is going to be utilized towards that. But more importantly, as I said earlier, our growth ambitions require us, particularly in US, to acquire companies, A, to build capabilities, just capabilities, apart from just revenue, and B, of course, the revenue and synergy aspects of digital transformation. So we are keeping this war chest so that at no point of time we have a situation where we are not comfortable with the strong position in cash that we have always kept in spite of revenues and so on. So this is a balance between a comfortable cash position and the payments and the acquisitions. And to that extent, we do feel that we need to keep the war chest as we go along what we have.
Yes.
I hope that answers your question well.
Yes. And second, for Mr. Hiral will best to Europe or US? What is your planning?
So Hiral is based in Chicago. He's operating as a person from US, of course, but being a global, like all of us, he's going to operate from all the places that he's in. But Hiral can answer it also if he wants to.
Yeah, no, I mean, I think you covered it, Ashank. So I am based in Chicago area. I have spent significant time in UK. I used to travel there once in 2 months, significant time in Europe. We're seeing some early signs there in the broader Europe market as well. So I have experience in those countries across, France, Netherlands, Nordics, Switzerland, Germany. And Middle East is an important part of our business as well. So we've done some great work, particularly in the Oracle Cloud business. So definitely between those countries and continents and India, as well as US. In the near term, definitely we have an opportunity to scale up in the US, given our capabilities and depth that we already have. So it might be more focused, or at least 50% of my time will be focused on the US. But I do plan to spend equal amount of time globally as well.
Thank you. The next question is from the line of Kshitij Saraf from Tusk Investments. Please go ahead.
Yeah, hi, thank you. Welcome, Hiral, and congratulations to the team for very good results. I have a question on the Oracle plan going forward. So with Eversys and Mastek about the cross-sell and the co-sell, how do you plan to bring in synergies, or rather, how do you see Mastek plus Eversys, let's say, by the year 2025? What's the broad vision like?
Let me answer it, and then Umang can add specifically, and Abhishek too. So it's difficult to talk about 2025 in terms of what would that unfold as. But as I said, that the opportunity that is opening up to us in terms of number of customer entries that we have is something that we are very seriously want to leverage. And as we speak, there is a constant effort to make that happen. And maybe Abhishek and Umang can add how we are leveraging that on cross-sell and co-sell.
Sure, thanks, Ashank.
Yes, Abhishek, please go on.
Okay, thank you. So, just building on the ambition that you outlined, Ashank, it's very, very simple that the whole rationale of Eversys acquisition was around the fact that Eversys has a great customer acquisition engine, and their sell with Oracle provides us with continuous supply of new customers across all the geographies. Now, any customer doing the back office modernization or moving from on-prem solution to cloud, they are starting their digital journey, and this is the first place where Umang and team actually gets engaged. But that's not the only piece that they want, and there are a lot more that comes along with that initiative. The ability to bring in larger Mastek capability and complement that and tap the customer's digital transformation journey via the start point that Umang and team delivers. That's what will be driving our future. And we want to reach a stage where every opportunity is eventually a co-sell, which means things in the pipeline are looked upon from all the offerings, not just Eversys Oracle implementation capability or Mastek digital transformation capability, but you look at it from all the service offerings, and it becomes, as Umang also alluded earlier in his presentation, a customer for life. That's the way we are looking at it, and obviously the customers coming in from the engine provides us with that opportunity. Umang, you want to add your comments to that, please?
Yeah, no, nothing, no additional to that. I think that you put it out very, very well, Abhishek.
And Kshitij, just to round it off, like Ashank and Abhishek said, and Umang covered that in some of his comments as well. The examples of that co-sell and examples of those integrated deals are already seen, right? I mentioned the media company earlier. That's a classic way where the back office is Oracle Cloud, the front office is Salesforce. There are multiple middle office elements as well as integration and API-based services that are part of the deal. And that's also an example where we've landed with a particular scope and we're now expanding into different areas. So we'll see more of that. I think your question on vision for 2025, give us some more time. We'll come back as we evolve. I think there's a lot more larger deals, a lot more larger customers that we'll be catering to. And we're seeing some really good foundational elements of these integrated deals, which will continue to grow in the coming quarters.
Thank you. The next question is from the line of Vivek Gautam from GS Investments. Please go ahead.
Yeah, congratulations on a good set of numbers, sir. But any word on the slowest quarter-on-quarter growth we have seen over last few quarters, sir?
Sorry, didn't get the question.
Hello? Yeah. The quarter-on-quarter growth has been slowest for the last few quarters. So is it a blip or sort of reasons behind the same, sir?
Arun, do you have any?
Yeah. No, I will share with you, Vivek. So very quickly, as we mentioned last quarter, order book and backlog was healthy. And some of the numbers which you are saying is after the impact of right shifting of the execution of the contract. Because as all of us know, digital skill set, there's a gap between demand and supply in the market, right? And it is also reflected into our attrition number. So there's a twin strategy which is going on in terms of having the lateral talent, at the same time investing into the freshers, training them and bringing them up to the learning curve, where we can service our customers much faster, right? So some of the gap is from the earlier quarter is driven by right shifting of the execution plan because the lack of resources which we have. But as we speak, we are not seeing any shortage in terms of our pipeline and the order book, to give you the comfort there.
Very nice, sir. And just a few words on the opportunity side and the expected growth rate for the different verticals for us in time to come, especially in North America.
Arun? Yeah. So in North America, as Hiral mentioned, again, if I give border level vertical split, our UK public sector is growing good. Again, this quarter and also if you compare year-on-year, including previous quarters, the growth is good there. NHS is also growing healthy. A lot of contracts is managing on a renewal basis, and lots of contracts is coming up in our pipeline for adjudication, which will more happen in quarter 3. So UK public sector looks good. US, as again mentioned earlier, it's more D2X strategy, which is helping us to penetrate into not only into the retail customers, but we are getting into non-retail customers as well. And it's complete umbrella of services which is helping customers to resolve their multiple issues at the same time. And it's the combined what Mastek was doing earlier after the acquisition. We combined them together with Mastek bespoke app dev capability, and it becomes complete D2X for the customer, right? So we are seeing those kinds of growth to continue in those markets. And again, as a vertical, as healthcare is going to be important, retail continues to be important in the US market. And from the Oracle side, as Umang mentioned, manufacturing also becomes one of the key markets for us to penetrate as we go on.
Thank you. The next question is from the line of Jatin K from Alpha Capital. Please go ahead.
Hello, sir. Congrats for a good set of numbers. So my first question would be, the Evosys acquisition has changed our trajectory completely. And we have decent cash on the books right now. So any plans to go for another acquisition, especially on the US side? When can we expect another acquisition?
So thanks, Jatin. Yeah, important question. But as I said earlier, Ashank here, that as we speak, we are evaluating obviously multiple candidates for acquisition. We have sufficient resources, as you all know. However, we have to be extremely careful before getting into new acquisitions. As I said, it has to add value to Mastek and Mastek's future growth and digital area. Either it has to build us our capabilities that we lack or service lines that we do not have, or it will bring us substantial customer base and revenues along with it, of the kind that we need. We have been very choosy. As we speak, we have a team which is evaluating many customers, many acquisition candidates. But as always is the case, it is extremely difficult to predict when it will happen. But as you rightly said, we are focused right now in a bigger way in US, because that is where the growth vectors are. And present focus is looking at US-based companies. But we are open otherwise to other opportunities if they fit into what we do.
Sure,
Jatin, maybe just to quickly add on there. See, acquisition strategy is important, like Ashank mentioned. But we're also looking at a broader framework as part of our strategy, which includes organic capability building. It includes partnerships, like I mentioned earlier, as well as M&A, right? So there are certain areas where we would want to strengthen the capabilities in-house, because we feel those are differentiated offerings that add on and align well with our digital and cloud services. There are certain elements where we will partner, like I mentioned, infrastructure and security. And there are certain elements we would want to do an M&A. And the framework is there in terms of how we've evaluated those potential options, and actively, like Ashank mentioned, looking at various possibilities in the US.
Thank you. The next question is from the line of Mukesh Prajapati, individual investor. Please go ahead.
Yeah, congratulations for a good set of numbers, sir. I think my question all have been answered. So wish you all the best for next quarter, sir. Thanks.
Thank you, Mukesh. Thanks.
Thank you.
Thank you.
Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
So, thanks. It is, as usual, always energizing to meet our investors and our well-wishers. So it is your energy that drives us through to perform, as we said, as we are building capability, as we are building leadership, as we are building marketing engine. However, I want to end with, of course, little bit on somber note in terms of great work that all Mastekers have done in spite of very difficult times that we went through the second wave. It is very unfortunate that some of our Mastekers lost their loved ones during this period. But we are all here, and we are with all of them, and we have now vaccination program and other things that we have initiated to see that they are most comfortable in terms of what they do and where they work. It has been hard time for them to work from home, and looking forward to post-COVID era where we are back in business as usual. Hiral, you want to add anything? Otherwise, we can close the thing.
No, echo your comments, Ashank. I mean, it's been a tough journey for many individuals and families, and I think our talent and HR team has done a phenomenal job keeping the engagement. Our leadership team has gone out of the way to make sure that they are closely connected with our employees and their families in many cases. So we expect some of those pandemic challenges to remain over the next couple of months, but hopefully seeing some of the trends, it looks like we'll be back in business soon. But very excited to be part of the Mastek family again, and like I've shared and some of the comments earlier, we'll be sharing more details in the coming weeks and months, and look forward to your continued support. Thanks, Ashank.
Thanks. We can end this.
Thank you. Ladies and gentlemen, on behalf of Mastek Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.